My name is John Zietz. I work at Cargill in West Fargo. Of course, we're a crushing facility for flax. I'm actually filling in for Jacob Downing, who is our representative on the flax board. He was actually on vacation this week, so I stepped in to help out on that as well. So, all right, a little bit of what I have here today is going to maybe overlap a little bit some of the other previous presenters there, but for the most part, I'll kind of focus on the markets and that sort of thing. So, 2020, prices were fairly good when the new crop prices rolled out. We're coming off of the 2019 crop, which as was mentioned previously, that was just short of a disaster on not only flax but other crops as well. Had struggled with some of the quality and test weight and harvest timing and moistures and all that. So this year the crop was really good overall, and so that was good from that standpoint. It makes our lives at the crush plant a lot better as far as the yields go and that sort of thing, and for the growers as well. This year, Canadian exports were much higher than normal, and I'll kind of touch on that here a little bit later, affecting and impacting the North American flax markets, and leading into what you just said there, Greg, that prices have escalated to near historical highs. So, that's good from that standpoint. However, you got to be somewhat cautious because at some point you could start rationing demand as well. So, the carryout's going to be tight this year, and I'll have a slide here later that'll show that. And that's one of the reasons, again, why the prices are where they're at today. 2021, looking ahead for the upcoming planting window here, and then the subsequent marketing year. The new crop bids that are posted, or at least on our end of things, are about $2 a bushel higher than last year at this same time. And oilseed prices are higher, and expectations are probably high as well. So we'll see where that goes. Again, some pretty good opportunities there for, if you compare back to historical price points for forward contracting, it's pretty good. So growers will have to decide what they want to do on that. In Canada, they're projecting about 22% higher flax acres in 2021. That was the last report they came out with. So that, I guess, would be beneficial for them. They export a lot of stuff, and so with higher prices, they're anticipating higher flax acres in 2021. The big question is, will demand continue on exports, the crush side and other domestic use, whether it be feed or food, and those segments seem to be growing. On the crush side, we're fairly stable. So it's not really moving higher, it's not really moving lower, it's fairly stable. And then exports, the US doesn't export a lot offshore. Most of that would probably move up into Canada as an export, but for the most part, it's crushed or used domestically for food and feed ingredients. So the big report coming out on March 30th, it's going to be really pivotal on all commodities, not only flax, but all the rest, pretty much any commodity. It's going to be pretty pivotal on what that report shows. Weather and soil conditions are quite dry. And one of the previous slides there on the yield, it was really fascinating on the 2008 and 9, the drought window there, where he showed that the flax yields were fairly low. Not big surprise on that, but certainly is a yellow flag, but not only for flax, but for all the crops in the areas that are dry. So, and then the other thing I put on here was kind of a question mark with the big demand we've seen. I know I talked to a grower here, I think it was yesterday or day before, and due to some chemical issues, he's not going to be able to plant flax this year. It wasn't huge acres, but he had some seed stock that he was going to use, but due to him not planting any acres, he was just going to sell that into the market and capitalize on the good market prices right now. So So kind of a question mark on seed stocks. Hopefully there'll be enough seed stocks to plant the crop and get the crop in the ground for 2021. This is just kind of a repeat of some of the previous presenters, just to kind of show the trend on flax acres. This goes back to 2000. The zigzaggy line up on top here is the yield. And so again, dry weather, good weather, just bounces around a little bit. Interesting to see that there's about a 20 bushel potential on the spread between the varieties and environmental factors, and then what the grower could do to push that yield up a little bit more, because that's where the money's at, is keeping those yields up. Again, this is kind of redundant a little bit compared to some of the other slides, but again, the big question is, what's going to happen in 2021 here. So in a couple of weeks, we'll find that out, and see what that'll be, and that'll again help give some direction to prices as we move forward in time in the 2021 marketing year. These two charts here, again, I'm sure most people have seen these or looked at them and understand the correlation, but the carryout versus the use is a stocks to use ratio, and when that gets lower, that number goes lower, your prices tend to go higher. And so on the right-hand side here is probably the best one to look at, is the stocks to use ratio. You can see when it was going down, the prices were going up, and as production went up, the prices came back down. And this year, this is kind of an estimate here, the prices have rebound dramatically because of the carryout, the demand, and the usage. And this is led, not only by the U.S. side of the border, but the Canadian side of the border. They're a bigger producer up there, and they've had a huge export program, and consequently that's helped spur the market in North America as well. So what happens beyond that, I don't know, but we're coming out of a tight carryout situation. Prices are probably going to remain firm for a while. New crop prices are on the upper end of the range as far as where they have been posted ahead of planting, and also during the marketing year as well. If you look at this bar here, I mean, we're up in these ranges, which is kind of at the historical high watermark. So hopefully that'll encourage some flax acres and show some returns to the growers. So leading into that, these are the NDSU crop budgets that we, and I'm sure a lot of other people, look at. It's baseline, so we basically go by crop district based on those NDSU crop budgets. And then we just try and plug in market prices on the various commodities. And we're using our delivered West Fargo bid, kind of an average price, to calculate out the flax return per acre. And so it's not leading the pack by any means, but it certainly is competitive. And so hopefully that, and this is Northwest, which would be up in that higher density of production area that was shown on one of those other maps earlier. Southwest North Dakota, there's actually some flax down there. And so we tend to pull stuff out of there as well. Acres aren't quite as big, but flax, again, should be competitive, and should hopefully get a look at as well. And then the North Central, which would be kind of that Highway 83 corridor up to Minot, up to the Canadian border. Again, it's hanging in there. It's not top dog, but it's competitive with hopefully all the other crops for that particular area as well. And then last, the Canadian side of it, this was actually the report that came out on January 25th. And so this is kind of their S&D up there. And you can kind of see that, again, their production is projected to be up about 22%. So the production is this column right here. So you can see that, they anticipate a higher production up there. The key thing I think to look at is the exports. And you can see they went from 350,000 metric tons up to 500,000 metric tons, and then they're projecting about the same for this year. And again, some of that moves into the U.S. on the exports out of Canada. The biggest chunk goes offshore. I believe China is probably one of their biggest destinations. And so it looks like that's going to remain somewhat firm for a good number there on exports for next year. And then if you look at the carryout and their average price projections up there, the carryout's going to go from 64,000 metric tons. And you can see that's why things, when demand goes up by this amount here, and the carryout is tight to begin with, production was good, all of a sudden you're looking at a pretty explosive situation. And that's what happened this year up there. And it looks like now the carryout is going to jump up from 100,000 metric tons up to 175,000 metric tons based on this production number. And of course, that's still to be determined yet with the weather and acres and that sort of thing. So with that, they're projecting a little bit of a drop in price, not back to the 2019-2020 cycle, but certainly will stay firm, but it looks like it could soften a little bit based on what they are projecting up there. So again, this influences us a little bit down in the US side of the market because flax does tend to kind of move back and forth a little bit. And so didn't want to spend a lot of time on the Canadian side of the border, but this does impact the flax markets and prices in North America. So, and that's all I have for you.